Hello, everybody, and a warm welcome to all people out there to our next webinar here at JFD Brokers. Today is the 10th of August 2017, 7 p.m. as the usual time for those power webinars at JFD. Yeah, my name, as always, Stefan Friedrichowski. I think more or less now you know me even better than a couple of weeks before and the kind of webinar you can expect from me. Today's topic, breakout strategies. So that is really one of my favorite kind of strategies to be traded. You will see a lot of examples during the webinar with some well-defined parameters that you can trade those breakout strategies by your own simply by applying the same kind of parameters. I will go into all the details. You will get all the details. And by the way, if you want, you can have already the slides. You can simply download the slides via your GoToWebinar control panel. So I have uploaded that PDF already. And maybe it's especially interesting because later we have really some sets of parameters which describe a breakout strategy. And I repeat myself, it's really one of my favorites because I like that kind of concept. And I will show you 3 accounts, live accounts at JFD Brokers, where I trade exactly those kind of strategies. So as always, I'm not only talking about what I want to present here. No, I trade what I present. Okay. Before we really start, I have to show a few seconds the slide as always. Especially today, we have really some nice trading setups. But finally, as always, if you trade those setups, if you trade things I deal with in that webinar, you trade on your own. But I think everybody knows that and is aware of that fact. So whenever there's a question, simply you can use the chat channel as already somebody did here. So good evening back to you as well. That's always nice to have so many people with in those webinars. Yesterday with the German webinar, we nearly hit the limit of participants. But anyhow, today is the English one, and we go on directly into the topic. So what is breakout strategies about? I want first to show you some real basics of that kind of strategy, because it's a setup with different variants, but therefore we have first to focus on the real basics of breakout strategies. Why do we trade them? How do we define breakout strategies? And then I go one step further in details because I want to share with you some indicator here. That indicator, if you want, you can just send me an email as always, and I will send around that indicator as well, because it is free available in the web as well. That indicator helps you to trade breakout strategies simply by drawing some lines, you will see. And then once again, I will show you how even such a strategy, which is a little bit more complicated to get that strategy into an Excel sheet, but I succeeded in getting it in an Excel sheet as well. I will show you some results there. And as always, even that Excel sheet you can have. I make already the remark, this time it will not go direct out via email because the Excel sheet is that big. It's 56 megabyte Excel sheet for S&P 500 breakout strategy, but I can send you a Dropbox link and then you have access to that Excel sheet as well. And then finally, as mentioned already, 3 good examples with all the details for 2 currency pairs euro, Japanese yen, then British pound, US dollar, and then the combination of DAX and S&P 500. And all are breakout strategies which work well. And we will look into the live accounts later as well. So what is basic of breakout strategies? The first thing we always need is we need to define a range. And I have a picture on my next slide, and we will go through the picture as well. But let's first start with thinking we have a range. Whatever range we have, that range has an upper limit and a lower limit. So that is a range is now defined. How is it defined? Maybe we look for the previous day, for whatever underlying that we say, okay, we take yesterday's high as the upper limit and yesterday's low as a lower limit. And then we have that range defined. We might take the previous week or whatever. Or we do it a little bit different, and that's the way we will do it mainly today. We set up 2 times, a range start time and a range end time. For example, 5 o'clock in the morning until 10. And then we ask ourselves, hey, within that time period, what is a high and what is a low? And then we have, once again, a well-defined range. Or you may go for pivot points, for example, and take the upper pivot point and the lower one as being the definition of your range. What's always then the next step is, if you have such a range well defined, then you typically place 2 orders. One buy stop order at the upper limit of that range, and one sell stop order at the lower limit of that range. And in most cases, if you run a strategy like this, then you do those 2 orders as OCO orders. OCO means one cancels the other, and it's exactly meaning what the name is. So if, for example, the long trade, the buy stop order is triggered, then you simply cancel, you delete the sell stop order on the other side. And that is meant by OCO, one cancels the other. OCO orders are not directly accessible in MT4, but there's a tool from JFD that you can even place those kind of orders so that whenever the one is triggered, that the other is cancelled, or simply you do it manually, that you cancel the other one. The stop loss for those orders is typically the opposite range limit. That means if we have an upper limit and a lower limit, and for the buy stop order, the stop loss is a lower limit, and that's all. And vice versa, of course. So it's a breakout strategy. That means that the main assumption and that we go for those kind of strategies is that we have a well-defined range, and if now the price breaks that range, that this breakout will be long-lasting, will be sustainable, will continue in exactly that direction for some time. So that is a basic definition of any breakout strategy. You have a well-defined range, and then you go on with that breakout in which direction it might occur. Let's look for something like that simply by looking to a chart. And let me more or less repeat what I have had on my last slide within the chart once again, because then I think definitely everybody will know how a breakout strategy is defined, and then we can start on working with exactly that kind of strategy. What you see here is not a real fresh chart on euro, Japanese yen. I think the chart might be even 3 years old, but it doesn't matter. It's just to explain how a breakout strategy works. When I created exactly that picture here, I started first with two lines, two vertical lines. One vertical line at midnight and a second vertical line at 8 o'clock. So I draw exactly those two lines, and that was a start. The next step has been I went on with two horizontal lines, because within that time frame, midnight to 8, there's a high within that price, and that is exactly here. So therefore, one horizontal line exactly here. And there's a low within that time frame. Unfortunately, it's the last candle which created exactly that low. Therefore, I know that there's a small line here hidden. But anyhow, so that was a reason to draw the lower limit exactly at this position. And now the range is absolutely well defined. Starting from a time range, midnight to 8, we created now a price range, and therefore those two horizontal lines. Think about the time is now 8 o'clock, and that was exactly the time to place two orders. Because at 8, we know now the price range, and therefore we placed one buy stop order exactly here and one sell stop order exactly here. Stop loss is always the opposite side. So for that sell stop order, stop loss is here, and for that buy stop order, stop loss is here. The assumption is immediately visible. If we have a breakout to the north, hopefully it goes on and then we follow. If we have a breakout to the south, hopefully it went on and we follow. And that is exactly the breakout strategy. Look for here for that example. I think around here, where now my cursor is, the order has been triggered. This short order has been triggered. So from that moment onwards, we are first short in the market, and second, we cancel the buy stop order on the other side. And then, as always, when a presenter here talks about strategies, the price is doing exactly what I want him to do. It went south and finally hitting my take profit, which is here. So that is exactly the breakout scenario we want to deal with. And that is just an example at euro Japanese yen. Immediately, there must be at least one question. And the first question might be, hey, take profit, where? In my case, I applied the rule, I put take profit exactly at that position that I have a risk-reward ratio of 1, meaning exactly the distance of the range itself has been added here to the south, so therefore risk-reward ratio 1, and or in another language, my take profit multiplier, in this case, is 1. Thinking about those kinds of strategies more from a mathematical point of view, I would describe this strategy as being a strategy with 3 degrees of freedom, or more in the trading language, not degrees of freedom, then we would call them parameters. Okay, what are the parameters here? The parameters would be range start time, in my case, midnight, range end time, in my case, 8 o'clock, and third parameter, simply the take profit multiplier, or in a trading language, it would be the risk reward ratio. And that's all about breakout strategies. But of course, there's now the question, hey, what times I should go for? 8, maybe 10 to 12, whatever. Risk reward ratio 1, 3, 1.8. That's the question. So we have to find good parameters for a given underlying, because you might even imagine that you cannot trade with one set of parameters all the different underlyings, simply because when we look for forex pairs, there are typical times for those forex pairs. For example, if we would have the Australian dollar within that forex pair, then it might be even times in the night, because then the life starts in Australia. Same maybe for Japanese yen. If we go on for euro, it might be maybe 8, 9, 10 o'clock. And then later the US dollar comes into play. So therefore, different times for different underlyings. But before we go into the exact good parameters, let's think about further options about that kind of strategy. And I got already here one hint in the chat, but it's now exactly here on my slide. You may think, okay, maybe I don't want to trade both directions. Maybe there's an overall trend in that specific underlying I'm looking for, and that trend already goes to the south. So why should we place orders to the long direction? So an EMA, for example, as being used as a trend filter might be a good idea. In this case, we would simply ask ourselves, hey, we have an EMA, we are, for example, below, the price is below that EMA, then we only place the short order and we forget the long order. Just one idea, that if there is a certain trend, that we only trade into the direction of that major trend. You might think about other options or other filters, for example, like day of week seasonals. You remember we have had that DAX strategy using the day of week as an indicator for a certain direction. By the way, that strategy runs really well. So you find that in the records and on the YouTube channel, that strategy is performing quite well. I'm amazed that we always go exactly into that direction the seasonal tells us. But anyhow, so that might be a trend filter or a filter for long short as well. There are two other filters I want to mention here as well. One might be that we define a maximum range. So think about, typically you run a strategy with range times from 8 to 10, and then for whatever reason, exactly in that time frame, we have a big move. So we create a quite big range. Then you may think, okay, no time for a breakout scenario out of that even big range. So you set a maximum range size. Might be one idea. Maybe you compare it to previous days. You use indicators like an ADR, or you might even look to the volatility itself. So something like an ATR. If that is too high, that you say, no, I don't want to trade today. It's a good idea. I have something like that in one strategy as well, but not for today. It's another one. Minimum range size that we will apply today. Think about a range which is simply quite small. So that might be because we are around Christmas and stock markets calm down, and so nothing happens at all. Is that a good time to go for a breakout strategy? Answer, no. So if that created range is too small, it might be a trigger to say, no, no breakout scenario today. Another reason for looking for a minimum range size is more trading driven. Since we use that multiplier to define our target and think about a quite small range, then just by wiggling around, our stop loss might be hit. So it's good to have a minimum range size because we have to earn at least the spread and commissions additionally when we trade. So too small ranges are not good for breakout strategies. There might be some other reasons. Just your gut feeling might tell you, hey, today, no. Maybe because of news. You don't want to trade that kind of strategy when news are upcoming. I can tell you that I always trade news as well on those days. So I don't care about whether we have a news day, some Fed interest rate decisions. No, I always go for that strategy and don't stop it. But other people might say, no, not today. So other good reasons to say, no, not we will stop that strategy. Let's look a little bit how that strategy really runs. If we go for a live example, live now it means that I share with you a videos sequence in order to have a look on that strategy. I know that at least yesterday it worked well, that even that video can be transferred via GoToWebinar. But before I start the video, let's already look what we have here. Later you will see the time goes on. We start here in 2013. The x-axis is a little bit unusual. It's just counting the number of candles, but you will see the time will move on here. And then in this case, we have US dollar, Japanese yen. You will see that I always have those rectangles here in the chart. They create the range. And then in this case, the buy stop order, which would have been placed exactly with the end of that candle. Then that buy stop order has been triggered. And later the day, either the take profit is reached or not mentioned up to now. I personally trade breakout strategies always as intraday strategies, meaning at latest before 11 German time, I close a trade regardless where it's now, simply to avoid swap costs, and I don't want to have overnight trades. Finally, I don't want to ask myself on the next morning, hey, I have still a running trade from yesterday. Should I enter a new trade? Yes or no? And finally, what I definitely don't want to have within that strategy is to have over weekend trades. Then there's always a risk of gaps. So therefore, I close before I go to bed those trades finally. In this case, the time stop has been activated. That's the name I give it always. That is time stop. And now let's go for action here. So I start now the video, and you will see now we get a new range, and I stop the video already once again. That rectangular here has been only black, meaning minimum range condition violated. So the range was not big enough to say I want to have those two orders. It would have, in this case, it would have not been that bad because the a long trade would have been a success anyhow. But that is a definition. Let's go on here. So range big enough, therefore green. But now we have the situation we don't break that range, therefore no trade has been triggered. Now we get a new trade here, a profitable trade. Next day, new range. You see the trade, okay, profitable in this case, and so on. Everything is, so to say, live in a sense that it's history, but you see, we really get a sequence of trades here, and that is exactly how the strategy runs. We look for the range, decide big enough, yes or no, we place our orders, and now we have 2 days in a row, two small ranges. Now it's big enough. Unfortunately, let's see where that arrow ends. It was a minus trade, and so on and so on. That's a complete strategy. In this case, US dollar, Japanese yen. And since you see how now the strategy works in that video sequence here, let's have another view on the complete equity. But now we need a video which is running much faster. And I know that works. And now please concentrate here on the inlet within that graph. That's the equity. We are now looking for 10 years breakout scenarios, always with the same time, always with the same parameters. I emphasize that because in the next webinar in 2 weeks, we will transfer that kind of strategy to a self-adapting strategy. But that's a topic for in 2 weeks. Let's start the videos here. Now, don't care about the details. I even will go even faster. Now it's time to look how such an equity over 10 years of breakout scenario develop. And I know that you're looking on the screen right now is simply stepwise, but you see how that equity creates, and you see there's more or less a straight line developing for a very quite well good equity here. So now it's over. 10 years. 10 years breakout strategy with one single set of parameters. As always, we have drawdowns. Those drawdowns might even last 1 year. I know that. But that belongs to strategies at all. And nevertheless, we have a quite well linear increase, which is well. And I think everybody would like to have those kind of equities in his or her personal account. So that's the way a breakout strategy works. Let's go back how we can go on here. I mentioned that there's a very nice indicator, and you might simply Google for that name, or you send me an email and I will send around that indicator to you as well. That indicator, for whatever reason, is called TC24 Asian Session. It even doesn't have anything to do with Asian sessions, but that's the name of that indicator. And that indicator I will show live how it works, because that indicator helps you to get breakout scenarios in your MT4 account quite easily transferred. What you need is simply the range start time and the range end time. And then you adjust colors and the thickness of the lines. You will see in a minute. I already here give you the tip or trick on that. Think about you want to have range times from 10 to 12. What you have finally to do within that indicator, don't press 10 to 12, just press 1 minute before 9:59 and 11:59. It has to do with the details of that indicator. Otherwise, you will get small deviations and not exactly those candles you want to have. You will see in a minute. And the other thing to note is that you have to think in broker time. Whatever times you enter here in that indicator, they apply to the broker time. So the time which is shown in your MT4 account. So for example, at JFD, we have that, at least compared to Germany, we have that 1 hour time shift. And then if we want to go for 10 to 12, let's call it German time, or Middle East Standard Time, then I have to adjust that 1 hour time shift. But now let me show you that indicator live here, and that is simply how it works. That is the name of that indicator in my indicator list, and now I can set up here range times. For example, I want to go originally maybe from 1 to 6, and yet now you remember, okay, change to 5:59, and here it would be 0:59, and then let's change a little bit the thickness, because I know normally you don't see it if they are too thin, and that's all. And now you see exactly what I mean with my ranges. Let me prepare the chart here a little bit further without this one and with this one. Now I have activated the period separator. That means those vertical lines here are the end of the day, so midnight. And now you see exactly that range by 2 lines. And you can immediately see how the strategy, in this case, I have the underlying Australian dollar, Japanese yen, would have worked. Let's start here. So range is defined. We would, at the end of the range, we would place our 2 orders. Later the day, at that position here, the short order would have been triggered. Shortly afterwards, we have been in the minus, but finally, at the end of the day, even before swap costs, trade would have been profitable. Next day, not the same story. Range defined, our long trade would have been activated here, and then you see, even at the end of the day, it would have been a minus trade. Next day, short trade, profitable. Wow, what a trade on that next day. Wonderful. Strong move to the south. Then within that day here, we would have had the situation that no trade would have been triggered. Here we would have had our 2 orders, but even that low here would not have triggered our trade. So at the end of the day, there would have been no trade. And today would look quite well. So the good thing on that indicator is you get a visual impression on how a strategy would work. For me, that's personally not enough, because what I have done here was to look for that strategy 1, 2, 3, 4, 5, 6 days. Okay, that's not real statistics, but we can do such an analysis in Excel for longer time periods backwards. Or there are other methods to do that, but that is at least one thing I want to share with you. That is that I have created an Excel sheet which is doing exactly that kind of job. But you see how the indicator works, and it's a helpful tool to have that indicator, because then you can place your orders even manually, and you get the ranges visualized within the chart. So it's really quite helpful. But now back to my slides, or even better to say, we go directly into Excel. That Excel sheet I have created is, and I only show now a shortcut of that. Shortcut means, in this case, I have reduced the data set, but only for the time I look to that within the webinar. The Excel sheet I want to share with you is a complete set, and that has a history of I think 8 years or 7 years. In this case, S&P 500. So don't care that it looks like the equity is not that good, but we will talk about that for the last 7 months. But anyhow, I can tell you strategy works and works with those kind of settings quite well. So Excel sheet here means we can change parameters as always. And you might already have realized that I have quite strange numbers here. 930 and 960. What does it mean? It's the minutes until midnight. If you calculate, then you will realize that this one here is 3:30, and this one here is formally 4:00 p.m. But think about, I have here M15 candles as being my data source of all of my datas here. The M15 candle, which starts at 4, ends at 4:15. So in total, if I apply those range times here, like 930 and 960, it's doing the job between 3:30 and 4:45. So in total, my range out period are 3 quarters, and this is exactly the market opening at New York Stock Exchange. So we look for the first 3 quarters here of S&P 500 when the market goes live, and then we trade the breakout. And that is simply done within that Excel sheet with all the details, all the trades. And now we could change. I have applied here an EMA as an additional trend filter, and you might change the EMA period, and you see then there will be some small changes within the equity. Back to the question, Stefan is presenting an equity which looks like this. That doesn't look good. But think about S&P 500 exactly during the last 2 or 3, 4 months. Do you remember? Nothing happens at all. S&P 500 is within the last couple of months not the best underlying, doing exactly that kind of breakout strategy. You know that the so-called VIX, the volatility index of S&P 500, is at all-time lows, and that even already for months, more or less. So US stock market is already in a deep sleep, or nothing happens at all. Therefore, this strategy cannot be right now that profitable. But I know if you simply go with those numbers, the 3 first quarters, starting at market opening, and you use a trend filter of an EMA of 10, then you are on the right side for that kind of trading strategy if you want to trade the S&P 500. You can have that Excel sheet even with more data, then just send me an email, and you can even replace the data here by other underlyings. You might change the times and get your own private breakout strategy being tested, and you will get the equity line and the key figures about that kind of strategy. So that was the Excel one. But now let's go for 3 very good breakout strategies in a little bit more detail. Oh no, I have to change here. So I want to share with you parameter sets for breakout scenarios, and we will simultaneously not only look to the parameters, we will look to the live accounts as well. So first strategy is a strategy which simply combines several breakout strategies within a day. formally, I have within that one strategy 6 sub-strategies, therefore DAX 1, DAX 2, DAX 3, and so on. And those sub-strategies, they run totally independent. The one does not see the other. They have their own range times, own EMA as being the trend filter, own risk-reward ratios. Oh, that's still German. CRV is risk-reward ratio, or in German it would more mean chance risk Verhältnis. Anyhow, so that is risk-reward ratio. And I apply a minimum range in percent. What does it mean? Think about if the DAX creates a price range within that time range, let's say upper limit 12,050, lower limit 12,000, then my relative minimum range simply means 12,050 minus 12,000, upper limit minus lower limit would be 50 in this case, and then divided by the lower limit. That means we get a percentage number for the size of our range. And if my range is not big enough, then I don't trade. And you see the numbers. And that will happen. And if we go on here to S&P 500, I can tell you that during the last 3 months, I think I have only seen 2 or 3 trades on S&P 500, always because the minimum range has been violated. But that's okay. It would have not been that good to have those trades. But you see the certain time frames. S&P 500, for example, has one trade already in the morning. It looks more or less for the complete night. And then we have other range times later the day. Not the market open, but a little bit different. I mentioned already that due to the abnormal low volatility of S&P 500, we don't have trades right now and during the last couple of months. But anyhow, we have the DAX. And look here to the S&P 500 and DAX. You see no trades in S&P 500, but you can see trades ongoing here within the DAX. 3 trades are open, 3 short trades. Looks not that bad for today. Hopefully we don't get a sudden move to the north from now onwards. But you see that account has started, I think it's now 3 months or 4 months, has started at 4,000 euro. Is now at 4,150 and a little bit. But let's have a even better view here to the history of those trades. And I will create an equity of that live strategy, and you will see in a minute. Although S&P 500 is not trading more or less, we have those DAX trades during the day, and those DAX trades add up to this equity. Okay, you may think, looks a little bit funny here, a little bit up and down, but anyhow, in total, it goes north, and that's exactly what I want to see here. So developing of that strategy is good, and there will be time that S&P 500 comes into play here once again, and that we have that being added to the strategy as it should be, but it's only a question of volatility. So that's one breakout strategy. Honestly, it's 6 strategies, 6 sub-strategies working at different times. Trades are always closed before swap costs would occur, no overnight trades, and in this case the trades are already closed at 10 p.m. German time. because later, at least for the DAX, the spread would be widened, and don't want to have that being affected to my equity here. So therefore, close is already at 10. So that's one set already working absolutely well. I even share with you one example because I'm honest with those kind of strategies, which is at least for the last couple of months doing not that well, and still I share it. But it's the simplicity of that strategy which is overwhelming, and I like it. And I know from a longer history, it's quite similar to the one US dollar Japanese yen we have looked in the video, is that euro Japanese yen, looking for a range between 3 and 10 o'clock with an EMA of 11 and a risk reward ratio of 1.7. Yeah, let's look to that strategy as well here. It's running live. So let's look for today. We have a short trade. The short trade has been triggered already directly after the order has been placed. And now we are short in the market, which is good for today. So today's trade is in the profit region, but nevertheless, the account has started by 1,000. It's about 40 euros in the minus, but that's still absolutely okay. That's 4 months. I know those drawdowns periods happen, and they have happened and they will happen once again. But the longer history of that strategy is absolutely well. Third example here is the best one I have right now in my portfolio. That is a strategy on so-called cable or British pound US dollar. Totally different timing. So it's a little bit later the day, and since everything is here optimized, I can only interpret my own optimization in a way that I say that we are later the day it's time that the US market will come into play here. And the nice thing with that strategy is it's even acting with a risk reward ratio smaller than 1.9. And it's performing quite well. Here I apply the rule of a maximum range. So if my range is too big within that time frame, within the time period, then I don't place my orders. Those orders itself are OCO, as already introduced at the very beginning. One cancels the other. Let's have a look to that account as well here. Well, it's on a different server. Let me think where it is. Here we go. Yeah, here we have the example. Today's trade, not working that well. This one is in the minus. This account is only 2 months old, I think. And now let's have a look here to the equity, the detailed equity during the time period strategy has been activated. And now here we go. So here we have that kind of strategy. First 1.5 months already positive, going well, slowly. But then since the last 15 trades, most of them have been quite profitable. So equity goes strongly north. We have a hit rate up to now of 60%. And we need such a hit rate here because of our low risk reward ratio. So it's performing quite well in the range of 8% plus. And good thing, because I always try to get some strategies on extremely small accounts. For this strategy, I have been successful to even get a strategy up and running in a 500 euro account. And even then it works. So it works definitely well with that strategy on British pound, US dollar. So performing well, even that today's trade does not look that promising, and I don't expect it will change until before midnight that we get that trade in the profit region. But who knows? That would be, if you look more from a charting perspective, would more be like a fake breakout. So we have had that breakout, but immediately went down the road back into that range, and now we are exactly in the middle of the range once again. Okay, can happen. As always, we never will have a sequence of only winner trades in a row. Because it's next to here. This is, by the way, the DAX day of week seasonal. So already 6-7% now plus today's trade. Yeah, it looks quite nice. We have opened a short trade, and you see that candle here going south very well. So even that strategy introduced a couple of weeks ago is definitely worth to be looked at. Okay, so that have been now 3 well-defined strategies for breakout scenarios. And at all, I'm now on my summary here. You see that breakout strategies are easy to be implemented. So you start with a given price range, however you define that price range. So what is the real origin of that price range, day before, week before, or in those cases I presented here today, just certain times, range start time, range end time. And what you do is you place stop orders. A buy stop, upper limit, sell stop, lower limit. And that's all what you do. In most cases, those orders are OCO, or you use any other trend filter, like an EMA, which we have done in 2 strategies here as well. I've given 3 examples with all relevant parameters, which you can use by your own if you want. And you have seen that there's a very nice indicator which helps to get that strategy up and running even manually, because you can have with that indicator directly the range being indicated in the chart, and it's then easy to place those orders. My personal opinion is breakout strategies should be in everybody's trading toolbox. They are easy to go for, and they are profitable, which is, I think, the best argument. And you can adjust that kind of strategy to your own settings quite well. So that is good. You can change parameters and find your own one. And about changing parameters, that will be part of the webinar in 2 weeks about self-adjusting strategies and how to go with that kind of methodology. I will present in 2 weeks from now. If you have any further questions, just get in touch with me. You see my email address here. I know it's really complicated. s.friedrichowski, complicate last name, and then at jftbrokers.com. And you can have slides and no question. I will send it to you. And if you are interested in that Excel sheet, I will send you a link to that huge S&P 500 file with all inputs that you can optimize the strategy by your own. Yeah, that's for today. I hope you enjoyed the webinar, and I hope I will see everybody of you again in 2 weeks. But yeah, make sure, or please recognize that there are a couple of other webinars, even in English, on the JFD channel. You find them on JFD website, and I can only recommend wonderful colleagues there, which have something to share as well. So that's from my end for today. And have a very nice evening. See you back, hopefully in 2 weeks from now. Bye bye.